Good morning, everyone. I'm Tim Black with Trading Strategy Guides. You're looking at a picture of beautiful Lake Tawakoni in Point, Texas. Sunset. I'm near probably 25 miles away from here. I hope everyone's having a great day. We're going to talk about the Currency Strength Indicator Pack. And if you hang around to the end, I'll give you a strategy to use the Currency Strength Indicator to make some money. Okay, I'll also be glad to answer questions when we get to the end of the presentation here. I'm going to pause for a minute or so here and let some more folks come into the room. I apologize to anyone who was here on Wednesday and waited around for us to get started. We ran into some technical issues, but hopefully they're all resolved now. We'll get started in just a couple minutes. Okay, let's go ahead and get started. I'm sure that you've heard if you've been trading for more than 5 minutes, the trend is your friend. Stick with the trend and you'll never go wrong. And that's true. But sometimes the trend is not obvious. Most of the time you can see it on the chart, but which chart do you look at? Which time frame? How do you know that the uh, trend is working on the time frame that you want to trade? How do you know if it aligns on? You just have to go over dozens of charts. That's where the Trading Strategy Guide's Currency Strength Indicator Pack comes in handy. It's a group of indicators that help to decipher the relative strength of each currency with respect to all the others, and it shows that information in several concise and informative ways. Basically, it solves the problem of having to pore over dozens of charts to get this information. The indicator pack currently consists of currency strength indicator, currency strength heat map, currency strength color desk, and the currency strength change indicator, which is new. If you've had the tool for some time and you haven't downloaded the new change indicator, you'll want to go do that because it's pretty cool. Plus, there's a template to pull all this together on one chart if that's how you want to look at it. And this is what it looks like on one chart. Now, I'm going to go over each of these elements, and then we're going to talk about a strategy. There are lots of strategies that you could use these tools for. I'm going to give you one. Hopefully, it'll give you some idea of what's available. So the first thing we're going to look at is the currency strength indicator. Just to go back to the original, that's this one right here, right in the center. This shows the historical strength of each currency on the current time frame. Whatever time frame chart that you place this on, it'll show you the historical strength of each currency. In the histogram format that you're looking at right here, it only shows the strongest against the weakest. But that's kind of nice information because you can see how the weakest has gotten weaker over time, and how the stronger currencies change periodically. The color of the bar corresponds to the color over here. These colors can all be changed. If you have colorblind issues, you can change these colors to whatever works well for you. Now, as I mentioned, the histogram only shows the strongest against the weakest. This is the currency strength line chart. This is the exact same chart, but it is in line format instead of histogram format, and each of the lines corresponds to the currency. So you can see which currencies fall in the relative strength historically over time. This is a little bit difficult to read in this format, but there are other ways to look at this format that makes it more readable, and we'll talk about that later on because that will be part of our strategy. We're actually going to use this tool in the strategy I'm going to present at the end of the webinar. The next tool is the currency strength heat map. This is nice. It shows each of the currencies, the 8 currencies we're looking at, and it shows its relative position to all the other currencies. So in the case, this was on the 5-minute chart, and this does show the instantaneous strength currency on whatever chart that it appears on. I had this on a 5-minute chart. This is a couple of days ago when I was preparing for the Wednesday webinar. The euro was significantly strong. The yen was significantly weak, but you can see how each currency falls with the others. And this changes dynamically as the currencies change. Gives you the most current information. This to me is one of the coolest ones, and this is the currency strength color desk, and it brings together all the relative currency strengths of all the currencies on all the chart time frames, and you can pick what time frames that you want to look at, and it will only display those time frames, or you can pick all of them like I have here. I guess I didn't pick the monthly one. In this example, the Kiwi is the board. You can see that it's very strong on the daily and the weekly charts, and it's a whole lot weaker on the other charts. And this suggests that the Kiwi is in a long-term uptrend, but it's probably pulled back in the last hour or so. And you'd have to look at the chart to know if it's at the beginning of the pullback or the end of the pullback. But if you watch this on a regular basis, then you'll know exactly where it is. But you can instantaneously look at this, and you can put this on. It'll show the same information. But you can instantaneously know where the Kiwi is back to the end. The euro seems to be just the opposite right here. You'll notice that it's in a downtrend and an uptrend on the short term, which suggests that it's pulling up a little bit from its normal downtrend. So it might be a good opportunity. The Kiwi might be a good opportunity to go long. Euro might be a good opportunity to go short, long-term trade. And this is the newest addition to the currency strength toolbox, the currency strength change indicator. It shows a change in the currency strength over time. The histogram shows the strongest against the weakest, in this case, the Great British Pound against the US dollar. And as you can see, the Great British Pound has been strengthening for quite a while here. This again is on the 5-minute chart. And then as before with the currency strength indicator, the change indicator also gives you the line chart if you so desire. And again, this one is a little difficult to look at, but you can, I'll show you how you can adjust this so that it only shows the currencies of the pair that's on the current chart. But as you can see on this 5-minute time frame right here, the Great British Pound was significantly stronger than any of the other currencies. So the histogram only shows you the strongest against the weakest, but the line chart, which, like I say, is a little bit more difficult to read, but it shows you that the pound was not only stronger than the USD, but significantly stronger than everything on the 5-minute chart. And again, this is from, I believe this is from Tuesday afternoon, Tuesday evening sometime, US time. Okay, so you're probably saying at this point, those are all real pretty graphics. How do I use them to make money? I mean, that's what I'd be asking. And I'm so very glad you asked that question. So that brings me to the 5 steps of my currency strategy. Except I lied to you. It's not 5 steps. It's actually 6 steps. So what can I say? Shoot me. It's a simple strategy. I'm a firm believer in simple strategies. I've been doing this for a long time. I've been doing trading rooms for a long time. I've been with Trading Strategy Guides and its predecessor for like 9 years. And I've hosted trading rooms here for many years. So I know that simple strategies are the best. And for my part, I have kind of a short attention span. I can't stare at charts for hours waiting for a setup. Um, I like it to be simple so that, if I get distracted reading an email or something or whatever, watching cat videos, that I can get back in the zone quickly and easily. So I like to keep my strategy simple. Um, more complex a strategy, the more likely that you could make an error, which could be detrimental. Keep in mind that this strategy is just a suggestion. Trading strategies are very personal. What works for me may not work for you. You may not have the same mental capacities I do or lack of mental capacities that I do. And if you're new to trading, I always wondered when I was starting trading why I always got vague answers from trading trainers about whether I should do this or whether I should do that. Um, that's because about 85% of trading is psychology. 5% is your entry direction, which everyone seems to focus on. 10% is about trade management. The rest of it is psychology. And I just picked those numbers right out of the air. So, they're meaningless. It could be that 99% of trading is actually psychology. It's about your mental state. It's about your ability to dispassionately execute your trade rules. And that's the important part. When you have rules, stick to them. If you just decide that you like where this trade is right now and you take the trade off and for profit, or you get scared and it's because it's gone way against you or something, you're never going to be a successful trader. You have to develop rules, back test the rules, forward test the rules, and then execute the trades with precision. I'll talk more um, about trading psychology in the weeks to come. I'll be recording quite a few videos for this YouTube channel, and stick with me. We'll get around to trading psychology, entries, trade management, trade risk, all those things. I'm going to talk briefly about all of them today because they're all part of this strategy. But know this, that just because you get the right trading direction doesn't mean you're going to win the trade. Just because you get the wrong trading direction doesn't mean you're going to lose the trade. Okay. So follow our YouTube channel. Click on the bell. Make sure you get notifications when we have new videos coming out, and so on. Okay. I'm going to share with you how I do the strategy so you can have a starting point. This is in red, so it must be really important. Do not use this strategy on a real money account until you have thoroughly tested it for yourself. I'll be doing a video on testing strategies in the future as well. So again, this is in italics this time. Do not use this strategy on a real money account until you have thoroughly tested this for yourself. Okay, I can't stress that enough. You don't need to start off losing. You don't need to start off winning either. And that's part of the psychology of this. And like I say, check out our channel and I'll talk a lot about psychology because I believe that's the most important thing. And the next important thing is trade management. And the very last important thing is trade entries. I know if you're a new trader, that's probably pretty radical information, but that's the way it is. Okay, this is how I want you to set up your charts, and I'll go into more detail as we go on. Start with a 4-hour time frame. I want you to add the currency strength line indicator. I want you to add the ATR, average true range. It's built into MT4. And I want you to add the parabolic AR indicator, which is also built into MT4. I'll show you where to find these and enter them. Shortly, I'll actually pull up a platform and show you how to get done with all these little slides here. We're going to use settings for the ATR. The default settings are 14 periods. We'll be using the ATR for calculating the stop loss and the take profit points. Okay. The currency strength, I'm going to make some changes to the settings on here. I want the count of the last bars to display 1,000. The period should be 200, and the smoothing period should be 10. Okay. Then set the plot mode. This is important. Set the plot mode to only currencies of the current chart. What that right there is what's going to remove all those extraneous lines from your chart. Again, I will go through this on a live MT4 platform so you guys see how it's done. But these are the settings right here. 1,000, 200, 10, and then set the plot mode to only currencies of the current chart. This is what your chart's going to look like, or something like this. You may use different colors for your candles. You may not use candles. You may have a grid back here. You may not have the period separators on. I'll show you how to set it up exactly like this if you want to. This is what the currency strength indicator looks like when it's set up the way I just described it. We're going to use this to pick our entries. Okay. This is the ATR, and we're only going to use the most current number. When doing live trades, we'll only use the current number. When I show you the historical trades to show you how to do this, we'll use the ATR that's appropriate for that particular time. Now, what the ATR tells you is the average true range of the last 14 bars. So what it does is it measures the length from the top of the wick to the bottom wick, adds the last 14 bars up, and then divides it by 14. So it gives you a simple average of the length of the last 14 bars. So the idea is it gives you an idea of the volatility of the currency at any given point, how much it's moving. So for instance, these bars right here move quite a bit. So the ATR is higher. These are tiny bars right here. So the ATR is lower, you see. Okay, here are the rules of the trade. And we'll post a PDF of this slideshow, so you'll get all this printed out as soon as we get done with the webinar. We'll post it underneath the video. Number one, you want to find a point where the currency strength line of one currency crosses the strength line of the other currency. Always wait until the bar closes, otherwise you may get a false signal. So I'm going to go back and look here. You'll see here's a crossover. The euro is crossing down against the USD. This is the euro USD, by the way. The euro is crossing down against the USD. So you would be looking for a trade where you would short the euro and long the USD. So it would be short the euro USD pair. Okay. We're looking for the point at which the euro strength gives way to the USD strength. Okay, and so that point is right here, and we'll find the corresponding candle. Only after this candle closes do we take the trade. You know, you can anticipate it, you can watch it coming up, but you're going to wait until the candle closes to actually take the trade to make sure the cross occurs. Okay. Again, I say these are 4-hour candles, so you got lots of time after the candle close. Okay, rule number 2, you're going to look at the ATR number in the upper left corner of the ATR window. That's the current average length, high to low, of the last 14 bars. Okay, so I'm suggesting you look right here. Right here, this says about 22 pips. Now, for that is the actual number at this point right here. All right. In this case, we're going to have to look at what the number is right here. I'll show you how to do that so that when you're back testing this, you can have some idea of how you would actually trade this if you had been trading it live right there. Okay, you're going to multiply that by 1.5 to get your stop loss. So in this case, I believe this is 22.4. So 1.5 times that would be 33, roughly. So 33 is your stop loss. So you'll find the close of the bar that you're at right here. You're going to want to go short. And at the close of the bar, your stop loss will be 33 pips above this. Calculate 2% risk of your trade based on this stop loss. Okay, to do that, you're going to use the a position size calculator. I will show you a position size calculator. I'll show you how to use it. It's pretty straightforward, but basically it'll tell you exactly what size to use on your position. Then you're going to enter 2 positions. In this case, the case that we're looking at right here, you're going to enter 2 positions short, each of them half of the total size. And the reason you're going to do that is because you're going to close half of this trade when your trade is positive by the amount of the ATR. So in this case, the ATR was 22. You will take off half of your trade when you hit plus 22, and then you'll set the rest of the trade at break even. So once the trade moves that much in your direction, you will no longer be able to lose because you will get half your trade. You'll get 22 pips on half your position, and then you'll set your stop loss to break even on the second half. You might want to do break even +1 or +2, just to cover your costs on the second half. Okay, and then you'll close the second half when it hits the parabolic SAR. So in this case right here, you see that this trade went on down until right here it pulled back and it hit the parabolic SAR. And what happens is when this parabolic SAR comes down and then price comes up and touches it, the point drops below. And I'll show you this on a bigger chart shortly. So you would have ended up with your profit right here. So you would have gotten a little bit of profit on the second one, not quite as much. Had it not pushed up so far right here, you might have actually made it down to right in here somewhere. But that happens sometimes, you know. It pulled up just enough to knock you out of the trade. Okay, those are the rules. Again, you're looking for the cross of the currency strength line. You're going to take the ATR. 1.5 times the ATR is going to be your stop loss. You'll calculate a 2% risk for your trade based on that stop loss. You'll enter 2 positions, each half of that trade size. And then when it's positive, you'll close one of them for profit. And the reason I use 2 positions is because you can just set up one trade with a stop loss and a take profit. A 1.5 times the ATR for your stop loss, 1 times the ATR for your take profit, and you can set just the stop loss on the second half. And then you'll close the second half when it hits the parabolic SAR. And you can do that by pulling your stop loss down so that it's right at the parabolic SAR at the end of each 4-hour bar. Okay? Here's the example I just talked about. Uh, the ATR was 16 pips at this point. There's the crossover. There was the entry. Yeah, this is the explanation that I did. So the ATR is 16 at the point of the crossover, 16 pips. So the stop loss will be 24 pips. Here's a position size calculator. I'll show this to you shortly. You enter the size of your account, the percent that you're willing to risk, the stop loss, the currency pair, and it will tell you the number of lots you can trade total. In this case, 83 micros. I'm sorry, 83 mini lots. You'll have to round that down to 82. So each position will be 41. You'll enter 2 short positions at 0.41. And you know you want to sell it because the euro currency strength line crossed down over the USD currency strength line. When the trade is positive by the amount of the ATR, which was take half off, and so on. And then you'll close the second half when it hits the parabolic SAR. Okay, so let's see what this will look like on a live chart. Okay, I'm not exactly sure why I'm not I don't seem to be showing the latest bars here. Well, let's not worry about that right now. This is the trade that I was talking about here. If you want, if it helps you, you can drop a vertical line right on top. You'll notice the crossover hasn't happened yet, so move it over one line. Now this is after the crossover. There you can see that it's after the crossover. So you're going to enter the trade on the close of this bar. So the close of this bar was roughly here. Not quite, right there. Okay, so you're going to go short right here. You can see that the ATR was 16 pips. Hope you can see that on the bottom. So you're going to set your stop loss (24 pips). Your stop loss is going to be up here around 138. Oh, I'm sorry, 113.83. There's your stop loss. Let's turn that red just so we know that we're looking at the stop loss. Your first target is going to be 16 pips down. So roughly 134.45. I'm sorry, 113.45. So your take profit's going to roughly, as you can see, one bar just kind of fiddled, the next bar came down, and we got half off the trade right here. So we got profit on the second half. We're going to move this stop down here to break even. And now, from here on out, I'm going to follow the parabolic SAR. So the parabolic SAR moved down to here. So I'm going to move that to there. Then and this we can move out of the way now. Parabolic SAR moved down to here, so I can move it to there. And then it hit us right here, so our second half would have come out at 113.49, so about 11 pips on the second half. So we got 16 pips on one half on the second half. Okay. Let's look at another example right here. And I'm not cherry picking these examples. I'm just taking them as they come. And this is the way you want to back test too, is to do exactly what I'm doing right here. See, okay, that's after the cross. So that's the bar directly after the cross. This bar right here. Now you see the euro is crossing above the USD, so we're going to take that long. Our entry is going to be at the close of this bar right here, the top. And we're going to go long. The ATR right here is 32. See, 31.8. I'm going to round that to 32. So my stop loss is going to be 1.5 times that. So that's going to be 40. Let's see, 48. So 48 is roughly 114.83. I'm sorry. We're going to be going the other direction on this one. So 48, 113.87. So about there, be our stop loss. Our take profit is going to be up 32. So our take profit is 114.67. So just about right there. As you can see, it never came down here to our stop. It came down here when we got half off right here for 32 pips. So let's say, and now we're going to set our stop to break even until we have a PR to follow. It ends up taking us out right here on this push down. So we're going to get half off for 30, the other half off for 1 or 2 or break even or whatever. Okay. Now let me show you briefly how to use the position size. Position size calculator. The position size calculator I'm using is myfxbook.com. And if you just go to myfxbook.com, you can click on Home, Forex Calculators. We'll put the link to this down at the bottom of the video. And position size calculator is the one on the bottom. This is very, very important. Do not risk more than a couple of percent on your account. That way you can handle a string of losses without any problems. Because a string of losses will come, and that's part of the job, and you have to push through it and keep going. Because if you give up, or you decide your strategy is not working anymore, then maybe your back testing was a total waste. If you back test this properly, forward test this properly, then you'll have confidence in your strategy. So this is very simple to use. I'm using USD account currency. You can change that to whatever you happen to use. I'm going to say my account's at $10,000, and I'm willing to risk 2%. You don't have to risk 2%. You can risk less than that. I know people that trade using 0.25% or 0.5% risk. That makes you a lot more resilient when it comes to drawdown, but it also caps your upside. Enter your stop loss pips. Let's see, the last one was 48 pips. So 48 pips. Enter the currency pair that you're trading, in this case, Euro USD. Click the calculate button. You can see that we could trade 41 units. Always round down. If you round up, you're going to be risking more than 2%. Always round down. So if we're going to have to split this in two, we're going to have to round down to 40. So we'll only be able to trade 20.2 lots or 2 mini lots per side per position. And so when we take half off, we'll take half of this 40 or 40 mini lots off for profit, so on. Okay, I'll be honest with you guys. This is my very first time using YouTube and Google Hangouts, and I'm not sure exactly how to go about seeing your questions. So if Ben, if you're on here, maybe you could help me with that. Bear with me, guys. We'll get this figured out. Okay, I can see your chat right now. Let's see. Hi, everybody. Glad you're here. Chuck, I apologize. I can see your chat right now. Let's see. Hi, everybody. Glad you're here. Chuck, I apologize. Yeah, I had the video up here so I could see the chat. Yeah, Chuck, I apologize if you were here Wednesday and missed this. We had some techie issues. May the trend be with you. Thanks, Ozzy. Let's see. Good morning, good afternoon, everybody. Thank you for asking the question about how to make money. I was hoping somebody would. I wasn't looking at the chat at the time, so. Okay, MD8, great. You don't like indicators. Good job. I understand. Some people don't, and that's okay. Marina, you don't like indicators either. Well, you know, what can I say? Indicators give us an idea of where we've been, and trading is a historical thing. We assume that we get an edge by knowing what the market has done in the past, and the best way to get an idea what the market has done in the past is to use lagging indicators. All indicators lag. Price action lags. I mean, it's all historical, right? Isn't that what we're all about, is figuring out what's happened historically and then operating based on that, you know? So yeah. I get what you're saying. I've done a lot of price action trading myself, and price action is nice. But you still got to have some idea where you've been. Chris, the settings on the parabolic SAR are the default settings. Let me go over there and pull that window up. I did fail to put that in the slideshow. Let's see. There you go. We're using a 0.02 step and a 0.2 maximum. Okay. The currency strength indicator, if you look right below the chat, I mean the video here, you'll see get the tool here. That link, just click on that link and that'll take you right to it. Okay, anybody else have any questions? I hope my explanation was concise and understandable. If you have any questions about the strategy or anything, I'll be glad to answer it. Even after we finish this video, I'll have to step out for a few hours, but I'll come back and check this afternoon to see if there are any new questions or anything. I'll be glad to follow up and give you the answers. Okay, if we have no other questions, I guess we'll wrap this up. Chris says he trades primarily a 5-minute chart with a 1-minute entry. What would be the best time frames to watch on the strength indicator? You know, that probably you'd have to think about the consequences of your trade. For instance, I don't know, how long are you typically in a trade? In other words, are you in a trade for less than an hour? Maybe the 15-minute, 30-minute, or hourly strength would be most important to you. Think about the consequences of how long you're in the trade, and then pick your time frame, your currency strength time frame based on that. On the currency strength here, if you right-click right on one of these lines and click on currency strength properties, you can change. What you have to do is double-click here to change this number. Put this on 1,000. I'm not sure what the default is, but I use 1,000 just so I can scroll the chart back. The period is 200, and the smoothing period is 10. And I use 200 because what it does is it takes a lot of the noise out of the chart. On the 4-hour, now if you're using a shorter time frame, you may want to experiment with these numbers, okay? And do that in your back test. Like I say, I'll be doing videos on testing. coming up in the next few weeks on how to back test, how to forward test, and so on. But experiment with the period and the smoothing period. This 1,000 here is just how many bars it's going to display in the on the chart. So time frame that you want to cover. And then experiment with the period number and the smoothing number, okay? But what you want is a nice smooth transition so that you don't get a whole lot of, this looks kind of convoluted if it gets too much back and forth. But actually, I tested each one of these, and each one of these, I think there was one loser out of all of these crosses right here on the 4-hour chart. So, but if you're, like I say, if you're using a shorter time frame, make sure you experiment with all of these on back test. And on the plot mode, you just double click here, and then you got a little drop down box. All specified currencies gives you that line chart that that's hard to read. If you want to look at the high and low or the minimum maximum values, that gives you the histogram. And only currency two, the two currencies of the current chart gives you the line chart that we're using to look for crossovers. And you can experiment with that a little bit too. Okay. Mency, I will post a link to the PDF for all the slides so you guys can have your own personal copy of the slideshow. Okay. Chris, your trades are usually 30 minutes to 2 hours. I'd probably look at the hourly then. Maybe shorter term. Maybe look at 2 time frames. The 15-minute, the 30-minute, the hourly, or something. 4-hour probably would not make sense for you to look at. Now that's just for future time frame. If you're actually going to trade on the 5-minute chart, then I would put this currency strength the way I've got it set up here with the crossovers on the actual 5-minute or 1-minute chart that you're trading. Okay, because this is actually your entry. Any other questions? Okay, you guys are awesome. I appreciate you guys attending this. Sign up to the subscribe to the channel here and hit that bell so that you get a notification whenever whenever we put a new video out. I'm going to try to do at least a couple videos a week. So we'll talk about all kinds of things. We'll do some analysis. We'll talk about the trading psychology, and we'll talk about entries, and we'll talk about other indicators too. We'll talk about all kinds of weird things. You guys can, we'll set up a place where you can send us questions too, and we can answer questions for you. Okay? You guys have an awesome weekend. I'll catch you guys next week sometime. Good trading, y'all.